Welcome to All About Stocks. This is a very special episode for us here at ET Now. ET Now is turning 4 years old this weekend, and that's what we're celebrating. This particular show is turning 100. This is our 100th episode, which means for the last 100 weeks we've been investing in stocks with you, planning our portfolios and giving you advice. On this particular episode, it's going to be more of the same. We're going to plan out your portfolios, pick stocks that you can use over the next 4 years and help you make more money in our stock market. Joining me in the studio are guests that have been with us for the last 2 years. Hemang Jani, of course, if you've watched the show on a regular basis, you're familiar with him. Amrish Baliga and Sharmila Joshi. Thank you so much for coming in. We also have a lovely audience here who have questions for our experts. But before we go anywhere else, there's this big question that we're all asking. We fell below 19,000 on the Sensex this week. A lot of retail investors are very nervous. This seems like it's been going on for a very long time. There isn't any good news in the pipeline, or we're not expecting any good news in the pipeline. I want a response from each of you on how long you think this is going to continue for, and what our strategy should be as investors right now. Hemang.
Well, clearly the sentiment has turned weak because of the way we have seen volatility in the global markets and in the currencies. And we are too much dependent upon the flows, given the fact that the domestic flow has actually dried up almost. And the earnings revival cycle is still a little away, though some of the macro data points are suggesting that maybe, things have turned for better, like inflation, WPI inflation in particular. But the benefits of that interest rate cut are still away because the investment cycle has not picked up. So probably we are about 3 to 4 quarters away from that bottoming up or earning upgrade cycle. So in the meantime, we think that the broad market would remain in the range of maybe 54, 5,500 on the way down and about 6,200 on the way up.
Amrish, how much longer really, and what should we be doing as retail investors, long-term horizon? We have our stocks in our portfolio. We're seeing value go down every day. What should we do now?
First of all, congratulations on completion of 4 years and 100 episodes. I'm sure we'll see 200 and 300 episodes possibly going ahead. As far as the question goes, at least in the short term, clearly the markets are negative. They are bearish. Because some time back, we had looked at the results, mixed to slightly better. The macro numbers clearly showed that we are bottoming out, and we are hopeful that we'll start seeing green shoots with good monsoons. But then bang came the rupee, the sort of a crack which you have seen, and that's thrown all the calculations completely haywire. Generally what we have seen is whenever the rupee cracks, last time we have seen from 40 to 45, 47 to 54, generally we have a knee-jerk reaction, and that's exactly what we are seeing now. And this continues for a few weeks. But after that, it normalizes, and then you start seeing a sort of upward move, because even in the past when we have seen the rupee cracking from 47 to 54, we had a knee-jerk reaction, and then we have seen the market close to those highs, 6,200 levels. So that is possible going ahead, but not immediately. The other thing is, generally in an election year, 6 months prior to elections, we generally see a rally. It could be a feeble rally, it could be a strong rally. I really don't know, what sort of rally we could have now. But because of this, I feel that possibly the downside is limited from here. We could see 5,500, 5,550, but then possibly at those levels, one could look at buying for a longer term.
Sharmila, you've always told us that whenever the market is looking weak like it is right now, and we have that list of stocks that we have in our portfolio that are good, strong companies with strong fundamentals, we should consider adding to our portfolios. Is this one of those times, or is this a time when we should just stay out of the market for a while?
So I reckon this is the time, because simply because I think, first of all, retail investors really not been there, in this last, I would say about a year or so, we've not really seen too much retail participation. If anything, whenever market goes to that 19,000, 20,000, 19,000 plus range, closer to 20,000, we actually see redemptions come in, which is what the mutual fund industry has been witnessing. And this whole rally has really been very liquidity driven, and that's been one of the problems of the rally. So I think if retail investor were to come back, and this is a good time for it to start coming back, then I think precisely as Amrish said, that if you're looking at market 55, 50 is again, kind a nifty kind of level that I would be expecting. So this is the time when you should start nibbling. You should have that list ready. You should be looking at the blue chips. Don't go for the beta play obviously just now, because that's not going to get you any joy. So even within that space, be a little conservative and start buying slowly. Don't buy everything that you want to. Or if you're, investing in mutual funds, again, start thinking what is your strategy, what are your goals, and start looking at the market actively. Because market does give you these windows where, when things look bad, but maybe from a longer term perspective, things would be a little bit in your favor. And I think this is, one of those times. So, to my mind, yes, this is, one of those periods when you should be looking at starting to invest or adding to your investment in a slightly more active way.
Alright, so make sure you focus on the blue chips and make sure you keep that list handy of stocks that are long-term good bets. Now, because we're turning 4 years old, we're giving you bets for the next 4 years. Bets that you can use for the long term to grow your money. And each of our guests has made a list of 4 stocks that they believe will do well in the long term. I'm going to start with the lady first. Sharmila, give us your 4 stocks that you think as retail investors we can start picking up now in small quantities like you advised and will stand good for us for the long term, for at least the next 4 years. What are your stocks?
So I've tried to mix it up and I've got 2 large caps and 2 mid caps or, non-Nifty kind of stocks. So let me go with the Nifty stocks first. Within the Nifty, I've chosen HCL Tech, largely because I think, this is one IT company that has shown us really good growth in these last couple of quarters. And in terms of valuations, I feel, there is some catch up that is left. And if you look at the earnings going ahead, then, you could be looking at a 900 kind of a price target for HCL Tech maybe a year and a half down the line. And it's also one of those stocks that benefits the most from a rupee depreciation. So in the near term, IT seems to be a stronger place to be in. And within that pack, I think, if you're looking at the top 4 companies, HCL Tech would be my top pick. So HCL Tech finds its place there. And again, in terms of, as I was saying, try to find stocks which are slightly, which are not high beta. So I think, that also fits the bill sort of okay there. Then the next stock is Sun Pharma. That's been in a lot of trouble these last couple of days. But I think you need to understand that pharma companies go through these phases, We are just feeling it more now, feeling the heat a little bit more now because we've been hearing of Ranbaxy and Wockhardt and, it's all seeming to come that there is some news on pharma companies almost on a
But that
daily
fine
basis.
does seem really large at this point that Sun Pharma would have to take.
Yes, and they had, provided for about some part of it, and it's a little more than what they had anticipated, but it's not that it's come completely out of the dark. It was something that was anticipated. And again, I think, going by that logic that you're going to see it correct, because Sun Pharma seemed to be on its own trip, and it was, just making these, new highs day after day. So you will see some kind of sanity return to the stock. You will see it correct. And, that's the time you should be looking to buy it because it is some bonus. I think when it goes X bonus, you can see it kind of, slowly start trading higher. So I would give it a target of about 1,200 rupees at the current levels. And, that's the kind of target that I'd have on a Sun Pharma going ahead. And I'd look to buy it. If I get it at levels of 900 or lower, I'll be very happy. I think it's close at around 950 kind of level. So I'm assuming that markets are going to head lower and, you start kind of acquiring the stock. Then the third stock is CEAT. We do have a buy report on the stock. I think if you look at the commodity prices, I think that's another point that, Amrish made, that commodity prices are heading lower. We expect rubber to trade in a band, and, whenever rubber prices are lower, we see that tire companies make good margins. So even if demand were to stay where it is, which is the industry average is about, 5.5%, 6%, we think that CEAT is among the cheapest stocks among the tire companies. It's a good company, good lineage, etc. So, we give it a target of about close to 130, 135 kind of a range. So, that's my third bet. And the last stock is LIC Housing Finance. I think among the stocks that I've chosen, that's probably the, in terms of momentum and beta, that's the highest place. So, it's a little risky in that sense because you do see a lot of momentum players participate in that. But there again, I think the story is very good because I think housing finance has been given a boost in the budget. This year should be good. The kind of track record LIC Housing Finance has shown is good. So that, with a slightly longer term, again, I think, if you get it cheaper, nothing like it. We had seen it go down to close to 230 levels, in that earlier fall in January, then it retraced all the way back to 270. So if you get it lower, great, buy it at those prices. And I would give it a target of about 290, 300.
Alright, so bets for the future from Sharmila Joshi. Quick recap, the HCL Tech, CEAT, Sun Pharma and LIC Housing Finance. We're going to take a very quick break. When we come back, bets for the future from Amrish Baliga and Hemang Jani. Don't go anywhere. welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. ET Now turns 4 years old this weekend, and that's what we're celebrating. We're giving you bets for the next 4 years, which means that if you are a long-term retail investor, this is the show for you. On this show, we'll find stocks that will stand by you for the long term. Of course, each of our guests in the studio have made a list of 4 stocks that they think are going to be good for us as retail investors over the next 4 years. I'm going to bring in Hemang Jani's list right now. Hemang, give us your list of stocks.
We've identified 4 stocks, and the first one is Mahindra, because we've seen that in the last about 2 to 3 years, it's been a consistent performer. And what we really like about this company is that the tractor business, which was going through a lot of pain, has actually picked up, and as per the management indications, the overall growth from here on is going to be much better.
Are you in any way concerned about, the price of diesel increasing, the special tax that is now on SUVs? Is that in any way going to hurt Mahindra & Mahindra?
Well, we've seen that there is some kind of a deregulation for diesel, so the prices have actually gone up. But overall, we have not seen any material impact on the volume per se. Also, some of the raw material prices going down would have some impact on the margins, and which is what we have seen in the last about 2 or 3 quarters, that the margin both in the automotive and the tractor business has actually improved. So we think that the Korean subsidiary which they acquired, Kanhaiya, has started doing extremely well, and some of the products which they've launched from that particular basket in the SUV category have started doing well. So we think that this would be one good stock to have. Also, monsoon, if it has some kind of an effect over the next 1 or 2 months, will have some positive rub-off on Mahindra. So we like that stock, and we have set a target of about 1160 for the next 1 year or so. The second stock that we like is Cipla. We think that in the current environment where there is a lot of uncertainty about various moving parts, right from global markets to commodity prices to currency, this is one segment which is going to be relatively insulated, has a very strong domestic presence, and what we like is that it has actually focused on the technology-oriented products in the nasal segment and few others, which is definitely high margin, and has a very strong presence in the US over the last couple of years. This company should do well. We have set a target of about 560 for next 1 year. The third company that I have chosen is Jyoti Lab. We think that the FMCG as a pack has done so very well, but there are few companies which would have a valuation comfort. So this company, which was just a single brand company so far, has actually made its presence felt across categories. Aggressive management is in place, and we think that given the basket of products and the sheer growth potential that the sector offers, this company should do very well. It's available at about 20-21 times, and we are looking at a growth of about 25 to 30% over the next 2 to 3 years. So we have set a target of about 260 for this one for next 1 year. And the last one that we like is McDowell's or United Spirits. This has been the best performing story that we have seen in this year itself. We think that, it is going to do something similar to what has happened to Unilever, because it's a global company with a very strong presence across countries. And even in the domestic market, the kind of product basket, kind of distribution strength that they have, the kind of manufacturing facilities that they have should do very well, because, liquor market per se is extremely underpenetrated. There is a lot of potential for upgrades from the first time users to the premium categories. And we think that given the kind of money which we are going to put in, there is a scope for a lot of improvement in the margins. So we think that this could be an interesting bet from a 3 to 4 year perspective.
Given what happened with Kingfisher Airlines, there's been a certain amount of pessimism with management within that entire group. Are you confident about the management of this particular company?
We think that now Diageo is going to take over the management, and we have already seen that happen in the appointment of the board members. And we think that given the fact that the valuation that the company, the MNC brand gets would reflect even in case of United Spirits over the next probably 1 or 2 quarters once the management change happens.
Alright, so 4 picks for the future from Hemang Jani. I'm going to give you a recap if you're taking that down. You haven't managed to get down all of those names. There's Jyoti Labs, Mahindra & Mahindra, Cipla, and of course McDowell's. Those are Hemang Jani's picks, and he's given us targets. Remember, on this show, we track those ideas every time the guest is back in the studio. We have time for a few more questions. We have audience members. Yes, you had a question. Go ahead.
Yeah, I would like to ask you regarding the Shesha Goa. In view of the metals and the metal stocks as well as the iron ore stocks which are going down for quite some time for the last 2 years. Now, what are the new next few years? What do you think about the next 2 years, the prospects for these companies and this segment of the industry?
All right. Even Sesa Goa in particular, the larger metal pack altogether has had a pretty rough couple of months. What's your call on Sesa Goa?
I think the overall environment for the metal stocks in particular is weak, given the weak global commodity demand which we are seeing. The Chinese data which are coming out are suggesting that the downturn is going to last for a little longer time. Also, some of these companies have FCCB exposure, and because of that, we have seen that companies like Tata Steel, Sesa Goa, Sterlite, they have been going through a bad patch. We think that though in terms of valuation, some of these companies are looking interesting, but if the global growth slows down, then the overall sentiment will remain weak. So maybe for another probably 6 to 12 months, this sentiment may remain. But yeah, from a 2 to 3 year perspective, whenever there's a revival in the cycle, some of these stocks could give you a good upside potential also.
Alright, so we hope that helps. We're going to take a very quick break. When we come back, 4 stock ideas from Amrish Baliga. We'll answer some more questions from our viewers. Our email ID is at the bottom of your screen. Feel free to write to us if you have any questions about your stock. Welcome back. You're watching All About Stocks on ET Now. Thank you for staying with us. We have a wonderful audience in the studio, and of course, our guests who are giving us stock ideas that will work for the future for long-term retail investors like you and me. We have Amrish Baliga, who has a list of 4 stocks. Amrish, for the long term, can you give us a list?
3 of them are mid caps, and 1 is a large cap. Again, clearly we have looked at those where the management is impeccable. I think that's what is going to last for the next 4 years. The first stock is Alembic Pharma. Again, a leader in anti-infectives, has been doing decently well. 16% sort of EBITDA margins, and we expect that next year we should see about 11 rupees EPS. FY15 we're looking at 14 rupees. So looking at this sort of a growth, I feel that this stock, which is currently closer to about 120, should see levels of about 180 or so in the next 12 to 14 months. The second stock is Bharat Forge, again a leader in auto ancillaries. I mean, this company hasn't been doing too well because of the sort of a slowdown which we have seen in the recent past. But then clearly with the inventories destocking happening in inventories at the OEM level, we expect that the offtake should start happening going ahead. And here also we are looking at growth of nearly 40-45% next year, because the company had degrowth like last year. So here we see the stock moving to possible levels of about 380-400 in the next 12 to 14 months. The third stock is a bank, comparatively a small bank, DCB. Performance has been extremely good for the last close to 12 quarters, and we expect that to continue. We see a DCB possibly becoming the next Yes Bank or Axis. Gross NPA levels have been coming down, currently at about 3.2. Net NPA is below 1%. We expect the gross NPAs to come to about 0.8 by FY15. EPS should actually move up from, currently it's about, for FY14 we are expecting about 5.86. The year after that we are looking at about 7.5. So this stock is currently quoting at about 44. We are seeing this stock moving to about 65. So, and the last stock is my old favorite, L&T. Again, we see this company continuing to grow at about 20% year on year, and I mean the price target still remains the same, which I've been saying for a long time, about 1850.
Well, I'm going to very quickly remind you that for the last 4 years since we have been talking, you've had 2 favorites, L&T and BHEL.
Right.
What happened to BHEL? Because BHEL has not managed somehow to meet those expectations that we've been talking about for the last 4 years.
Absolutely. And BHEL execution issues also were there. Order flows have slowed down, which L&T has managed very well.
Alright, so right now we're focusing on L&T. I'm going to give you a quick recap of the 4 stocks that Amrish has picked out for us as stocks for the future. He talked about DCB, Alembic, Bharat Forge and L&T. Very interesting that all of our guests have at least one pharma stock and one auto or auto ancillary stock in the stocks they've picked for the future. We also have some questions from viewers who've come into the studio. You have a question, so go ahead.
Yeah, I have the questions about the recent buyback offer from the Unilevers and looking at the trend of this particular stock. So one should opt for this buyback or wait and look for the market to getting from this stage to the next one.
Do you already have
Yeah, I have the Unilever as part of my portfolio.
As part of your portfolio. Okay, so Hemang, do you want to take it? What should he be doing?
We think that 600 is a very decent price, and in the immediate short term, we don't see a reason for stock to go up. The only thing is that if there is a revision of the open offer because of the acceptance being lower, that could be an upside trigger. But we think that the valuation-wise, it has reached almost peak, and given the fact that the overall growth is going to be a little muted, there is not going to be any expansion in the PE multiple as such. So we think that you could actually tender it in the open offer.
Do you have a target right now on Hindustan Unilever?
We have a target of about 620 odd, which is very close to the current price.
Okay, and what is the time frame that one can look for that?
See, we have set a target of about 1 year for that, and once we have this clarity about the acceptance of the open offer, then we'll review the target.
Thank you, sir.
Okay, do we have more questions? You have a question at the back? Yeah.
I have 43 shares with Kane at 312 rupees. I just want to know in terms of long-term investment, should I keep them or sell? At this point of time?
Shabina, do you want to take?
Yeah, I think keep them because I think the only interesting thing about Kane is that if you look at the share price graph of Kane, it almost mirrors that of crude. So unfortunately now, or fortunately I would say, but crude is has come off and it's staying at that $103, $104. But the positive for Kane is that they've made some discoveries and their production is likely to go up. So they'll kind of have a better earning going ahead. So from that perspective, I think for me, Kane is a stock that you should hold on to.
Amish, would you agree? Hold on to Kane?
Yeah, I think so. I think that's the best stock in that group. I mean, if you compare with Sterlite or Chisago, I would surely prefer a Kane.
Okay, do we have any more questions?
My question is on Tech Mahindra and the long-term outlook for it. And looking at the point of view of just its merger with Satyam, and majority of its revenue still come from North America and Europe. So, what do you think should be the action of Tech Mahindra?
Shabina, you said HCL Tech is your favorite among all of the tech stocks. What's your call on Tech Mahindra?
I think Tech Mahindra is also a good stock, and definitely I think that Mahindra Satyam, the merger finally happening is also a good thing because that period of whatever that waiting is kind of over, and once they kind of make the forged entity, then you'll have to see where to what level Tech Mahindra can take it. Because for Tech Mahindra, they've been specific to certain geographies and certain type of kind of verticals. And Mahindra Satyam will certainly bring in their own, set of clients and a set of businesses, and they'll be able to take it forward from there. So it will be a very interesting journey really for Tech Mahindra here on. So I would say, in fact that way Tech Mahindra is a relative newcomer to the IT company list, and it's been one of the, I would say, the most prolific newcomers that we've seen. So from that perspective, I think it's a good stock. I would say give this thing time to happen, the Mahindra Satyam merger. Wait for a couple of quarters and then take a call. But I think it was a good stock and that you should stay put in it.
Hemang, we've seen a lot of the IT companies move, especially with the fact that the rupee is depreciating right now. Within the IT pack, what's your favorite stock in terms of long-term value?
Clearly, we've seen that TCS has been doing consistently well amidst all this uncertainty, and it has been able to demonstrate a much better stability in the growth. And even if you look at their management commentary, they are saying that they will be able to grow at better than the average rate of the industry. So we think that from the lot that looks the best.
Hold on. Unfortunately, we've completely run out of time on this show. So we've done 100 episodes of all of our stocks. We're looking forward to the 100 episodes to come, which means that all of these guests are going to be here week on week answering your questions. You can send us any question you have on the email ID at the bottom of your screen. Thank you so much for spending time with us this weekend, and thank you to our audience for coming in. Remember to write in and keep watching ET Now.